Hello and what is going on, lovely people of the internet? It is Hootmoney here with another video for you guys today. Wow, what a wild day. We closed the day up 17%, close to that $3.50 strike. We got to about $3.47 at close. We got a nice push into close, and it's gonna be a fantastic week in progenity. We also got failure to deliver data. We got a lot of deep in the money call option volume, which is always weird. Whenever you see high volume in this deep in the money call options, that is a huge signal that shorts are scrambling to find shares because they can exercise those call options. There's a bunch of different things they can do. They can add short interest with those options if they're shorting it at the bid. So there's absolutely tons of things to talk about. We got another 4 million shares that will have to be delivered if we maintain the current price of progenity as of today. And I think hype is going to be building back up into progenity, as this is the week. This is progenity's week. This is PROG week. And if you guys want to join me for PROG week, every single morning I go live 30 minutes before market open. Hit those post notifications down below. It was great today. We hopped on a Twitter Spaces as well. Like the video if you guys haven't already. Subscribe to the channel for more. You guys know the drill, but let's get right into the video. So as you guys can see, here we have the Wyckoff accumulation pattern. It is starting to play out, which is making me feel like this is less BS, right? We got that test on Friday, and today we sprung out of it, boom, and we're moving up. And likely this momentum will continue. We set the tone today for what PROG has in store this week, and I believe we are going to deliver on this. Now keep in mind, this pink line from phase C to phase D, it shouldn't be a straight shot up. It should be a little bit of a half shot up, then to some consolidation, then boom, all the way up to this previous point right here at $4.10 where there's some consolidation, and then phase E where we skyrocket to infinity and beyond. If you guys wanted to check out this charting software, boom, WeBull is doing an upgraded promotion now. You can get up to $4,600. That's $4,600 as long as you deposit 1 penny on their platform. Absolutely amazing. This is absolutely a no risk, high reward investment. You literally invest 1 penny and you can get up to $4,600 in free stock. It's absolutely insane. If you wanted to check it out, links are below in the description and pinned comment section. But without further ado, let's get right back into the video. Here we have all of the November 19th strike prices. So you guys can see right here, this $3 strike price is now in the money. We expired today, or we closed today at $3.47. That would be close to putting us at the 3.5, which would put another 3 million shares in the money, and those shares would have to be delivered. So we're getting close to potentially 7 million shares that will have to be delivered on Friday, when this stock already has natural failure to delivers anyways. And we can see right here, regulation SHO. This means that progenity has failure to delivers going on in the stock on a constant daily basis. There's not enough supply on this stock, and the fact that we're getting all 7 million more shares in the money just shows that there's no supply. Where are they going to buy the stock once these things are exercised? They're gonna have to buy it on the open market. We're also getting just this weird call option volume. Here we see a bunch of these 0.05 call options for April 14th, 2022 being bought or being sold today. So this was a bearish strategy. It was part of a multi-leg strategy where they're also buying a bunch of these $2 call options expiring 2022, and you can see this is the profit loss at expiration. So this is how they're adding short interest, right? They're selling these deep in the money calls and then buying the $2 call, so that if it does end up squeezing, they're completely hedged, right? And they also have almost unlimited downside exposure, all the way down to 50 cents per share. So this is what the hedgies are doing now. Now, if they were confident that this thing wasn't going to squeeze, I believe that they would probably take the leg off where they're buying $2 call options to essentially hedge the infinite upside risk to shorting the stock. Because when you short a stock, you have almost unlimited exposure to the downside. So there's a good chance that a lot of these out of the money calls, like this 7.5, the 5.5s, etc., these are likely a good majority of them, or at least a decent chunk of them, aren't just retail FOMO buyers, but could possibly be short sellers that are just potentially hedging their short position, right? So that they don't get unlimited risk if this thing squeezes. So the fact that we're seeing large amount of short call options by short sellers being hedged by $2 call options, then that shows that they think there is possibly a potential risk of a short squeeze, right? There's no reason to limit your downside risk if the stock goes up as a short seller if you don't think there is a chance that that can't happen. So anyways, follow me on Twitter. I give you guys the live updates throughout the day. I joke about telling your grandma to buy Progenity stock and all that. So we also know that likely the $2.50 strike price and below are being exercised currently. The open interest in these option contracts are going down, and there's been a lot of buying in it, so they should be going up, but they are going down, and it's likely because they are being exercised. Now, this might be because they need shares. They're scrambling to find shares. They have exposure to the downside. They need new shares. They don't want to do it on the level 2 data because that would bring up the price, so they're buying these deep in the money call options so that they get these shares. Now, these could also potentially be hedges for short positions, but those are probably the out of the money ones, right? You can get a $4.50 call option, right, for 10 cents. There's no reason to buy one for 0.5 cents if you're just trying to hedge your downside risk. So I'm guessing it's likely a bunch of bears that are shorting these, bulls that are buying these and exercising these. Oh, there's also the chance that Ethereum Capital Management is the one buying these low strike price call options so that they can ride out this squeeze and dump the stock for some extra profit and maintain 51% ownership. So that is also a theory, but just keep in mind that any theory on what's going on is just speculation. But the fact that there's tons of activity in these lower strike call options is an amazing sign for the squeeze, because they're obviously running out of shares. And if we get a low supply, we can move over to this chart right here. If there is a lower supply, then that means that if all demand remains constant, the price should naturally come up. So even if there isn't increased demand this week, which there probably will be increased demand this week, if supply keeps going down in Progenity stock, that should naturally pull up the price. So when we have a liquidity crisis in Progenity, that is huge if you're long on the stock, because again, supply goes down, everything else remains constant, price goes up. Now, I don't want to spend too much time on the Ortex data. The cost to borrow has been going up, utilization back up to 100%. You guys know the drill. More return shares than borrowed. They're preparing for this squeeze, but you can just pause this right here, because what I want to talk about today is some of these failure to delivers. Where can we find it? Right here. Boom. It looks like on 1029 and 1028, there were tons of failure to deliver. You can see 6 million right here and 4.5 million right here. So on 1028, we can go 2 days back, because this would imply a 2-day settlement period. So the day that actually had enormous amounts of failure to delivers was this day right here, which on 1026, we see this goes up to about $6.47 in pre-market and comes right back down. This aligns perfectly with the day that we started to get 4.5 million failure to delivers. And the previous days was only 300,000. And then the next day on 1029, this is another day that had 6 million failure to delivers. We go back 2 days right here, 1, 2, boom, another pre-market, post-market spike right here. So what happens when you get a massive amount of failure to delivers? These need to be bought back up. They're likely going to be bought back up during times of high volume so that it doesn't affect the stock price. So they could have been bought back up here. They could have been bought back up right here, but they also could have been bought back up right here in this heavy accumulation zone, as explained by this Wyckoff accumulation zone or pattern. So they could have been using their last ammo to keep the stock price down in order to cover these insane amounts of failure to delivers. But at the end of the day, again, it's all speculation. You can also see a massive amount of failure to delivers occurred right here on 1021, 1022, and 1025. If we go back to the WeBull chart, we can zoom in, 1025 right here, boom, you go back 2 days, we see this random spike. What's this random green candle right here, right? And keep in mind that these failure to delivers is simply part of this whole liquidity crisis. And if they don't end up covering these things within 30 days time, they have to pay a massive fine, especially because this thing is already on the threshold security list before any of this happened in progenity, before any of these failure to delivers right here was occurred in progenity stock, this was already on the threshold security list. So even though this is already a threshold security, short sellers don't care. They're still going to short the stock and failure to deliver. But at the end of the day, if this stock continues to rise this week, they're going to have to cover those failure to delivers regardless, right? Because they don't want to pay that massive fine. So we got all these failure to delivers. We got all of these options right here that are slowly creeping up. We're regulation threshold security. We're seeing weird open interest in these $0.05 call options. Fact of the matter is, there's not enough progenity stock to deliver all of these obligations, and the only way to get this stock is to buy it back. And if supply goes down, price will go up. If price goes up, demand will also come up, because that's what retail does. And essentially, progenity should skyrocket. And this is all going to be coming into play as of this week, by 11/19 most likely. It's clearly insanely risky to be a bear in progenity stock right now, because this thing could potentially squeeze to epic proportions this week, which is why I also think a lot of shorts have hedged their position with these out of the money call options. And because their short position has become insanely risky and they're hedged using these out of the money call options, that could perpetuate this gamma ramp that we see coming into play as of today. So we gotta finish the job on progenity. We've got 4 days left, and it's going to be a wild ride. Tomorrow, we're going to send those $3.5 strike prices in the money. We're going to perpetuate this gamma ramp. We're going to keep seeing all this unusual option activity because it's an insane situation right now. We're going to get some added buying pressure from those failure to delivers so that they don't pay an enormous SEC fine. And I believe we should be getting a massive price movement this week. This is just my opinion based off the data that I've seen. It's all coming into play this week with options expiration. I'm so excited to be covering this. I hope you guys are too. But again, I always have to remind you guys, nothing I say here is financial advice. It's just opinions. It's up to you whether you agree with me or not. And what you do, whether you buy or sell or hold this stock, is all your choice. The only thing I ask is that you call up your grandma, you tell her, hey, Grammy, I got the most enlightening opportunity in the world. I need you to buy some progenity stock. You can give your Grammy financial advice, but I can't give you financial advice. Anyways, that's about it for the video. Hope you guys enjoy. I'll be seeing you guys next time. Peace.